think it's pretty clear that the big industrial companies have finally gotten so beaten down with such low expectations, they can at last blow away the numbers. We saw this yesterday with Cummins, the world's #1 engine maker, and we got confirmation of the trend today with Eaton, ETN, a classic industrial that manufactures electrical control products, power management systems, hydraulics, truck transmissions, and aerospace systems. This morning, Eaton, which we happen to own for my charitable trust, ActionAlertsPlus.com, reported its first really solid quarter in a little bit of time here. The company posted a 6-cent earnings beat off of a $1.23 basis. Inline revenues grew at 5.7% clip year over year. Eaton saw strength in aerospace, in vehicles, and an electrical division, which makes up 60% of the company's revenue. It was much improved. Margins are higher, bookings are stronger. Eaton posted record cash flow of $943 million. This company's becoming a cash machine, and perhaps as early as next year, it can put that money to work in a lot of very positive ways. Now, after jumping 3.5% yesterday off the pin action from Cummins, Eaton rallied another 1.8% despite the sell-off. Could this be the first of many better-than-expected numbers after a string of quarters that Wall Street viewed as less than stellar, setting the stock down 13% for the year? Let's take a closer look with Sandy Cutler, the chairman and CEO of Eaton, to learn more about the quarter and his company's prospects. Mr. Cutler, welcome back to Mad Money.
Thanks, Jim. Good to be with you this evening.
All right, Sandy, I saw a lot of strength here. I saw some real good strength in trucks. I saw some real good strength in the electrical businesses that have been a problem and in aerospace. Plus, at your closing comments in the conference call, you said the strength is continuing. Does that mean that we can get a little more confident that 2015 could continue a very nice trajectory that you introduced this quarter?
Yeah, Jim, we were really pleased with the quarter, and I do think it sets a great base, not only for the fourth quarter, but going ahead next year. We are living in a very different world than we were prior to the recession, and this kind of world growth that for our markets has been running sort of 2% the last couple of years means you've got to have a strategy that's built around not only converting on that growth, but also the self-help. So this integration of the Cooper acquisitions continuing to go quite well, and you saw that particularly lattice right through our electrical business. But you're right, we had a very balanced quarter, and we think it sets us up well for next year.
Now, a lot of the strength came right from the United States. Is that non-residential? How would you describe where data centers, utility spend? Where's the real uplift coming in the United States?
Yeah, I would say as we think about the world, Jim, and you're exactly on point, we think of the world being kind of two different stories today, sort of the 3% growth in the U.S., the 1% growth outside the U.S., and generally in the U.S., except for ag, the story is pretty good, whether it be in light vehicles, whether it be in trucks, whether it be in non-residential, whether it be in residential, aerospace. These markets are good. We see, incrementally stronger growth developing in the U.S., not a situation where it's rocketing ahead, but each year marginally stronger. That stands in somewhat of a contrast to the very mixed bag we see around the world outside the U.S.
Now, I think your conviction level I like to measure by your share repurchase. 3.4 million shares in the third quarter, $225 million of stock. That's aggressive for you guys. So clearly when this stock got to the low 60s, high 50s, that was an attractive level for you.
And we're clearly quite bullish on our future. If we think about this lower growth environment that we think we're likely to stay in, going into next year, we have another $150 million of savings coming from our acquisition of Cooper. We have another $35 million of savings coming from the restructuring we did in our industrial sector during the second quarter. Those are the kind of self-help activities that both drive faster earnings and market growth, and they also drive great cash flow. And as you mentioned, by the middle of next year, we'll be in a position where we start to have real increased optionality around either doing repurchases and or acquisitions. And so I think that really opens up a lot of opportunities to create real value for our shareholders.
You'd always been pro-dividend, too. Could that be a possibility one down the road, a dividend boost?
Yeah, and our board normally takes that action in February each year. As you've seen, we've been increasing that at almost a 15% rate over the last couple of years. And we've said that our dividend practice is that we increase that dividend in line with our expected future earnings growth. So, yeah, I do think you'll continue to see a handsome dividend from Eaton, and couple that with the potential, if we make that decision of additional share repurchases, that all just adds to, we think, the growth story within the company.
So, Sandy, I mean, it's kind of a tough period in some of the electrical products. You kind of solved it, right? I mean, whatever was the margin issues, they're behind you.
Yeah, we did, Jim, to your point, we had a disappointing second quarter. We spoke directly to that in the second quarter. We said that we had a game plan of 3 activities we were undertaking to get that resolved. We thought it would take us the third and the fourth quarter to do that. We actually got it done in the third quarter. So I'm enormously proud of our team and the job they did to get that addressed. We were back at 14.6% margins in that electrical sector. That's our systems and services sector. We think that that's likely to continue at those kind of levels for the balance of this year and build a good base for next year. So very much back on plan.
Well, terrific, Sandy. We needed that good quarter. You gave it to us. Thank you so much. Sandy Cutler, Chairman and CEO of Eaton Corporation. Good to see you, sir.
Thanks very much, Jim.
Long and consistently strong company. Had a couple of quarters that didn't equal what the street wanted. Looks like it's back. Inexpensive stock. A lot of good things happened in 2015. ETN. Trust owns it. Stick with Cramer.